The 5 minute opening range break is one of the easiest trading strategies out there. And the reason it's so easy is just because it's so simple. So, I'm going to explain to you exactly what it is, how you can utilize it, and when is the right time to use this exact strategy. Before we go any further, I want to say one thing. People in the comments lately, when I talk about the 5 minute opening range break, say doesn't have a very high win rate. You know what? You may be right. But let me just explain one thing. The win percentage is more than 50%. If you have a 1 to 2 risk to reward and you win 5 trades and you lose 5 trades, but on the 5 you win, you get your 1 to 2. Let's say you risk $500. You win 5 trades, you make $1,000 each trade. That's $5,000 on the week. Let's say you lose five. Well, you're only risking 500. So you lose 500 times five, which is 2,500. So you have a win rate of 50%, but you make $5,000 when you win $1,000 a day. You lose 2,500, 500 a day when you lose. Your net $2,500. You are a profitable trader. So if you manage your risk correctly, even with a 50% win rate, you're still profitable. You actually would still be profitable even if you had a 40% win rate if you manage your risk correctly and you get a 1 to 2 risk to reward. In the month of October, I only took 11 trades. You're not going to get this trade every single day. The opening range break does not present itself every single day. If you get a break and retest, it doesn't always go your way and it doesn't always retest. Some days just run, like the other day when NQ went parabolic yesterday. It just ran. There's nothing you can do on that. It doesn't retest, so you don't take the trade. So in the month of October, I took 11 trades. I won six and I lost five. So on my 6 wins, I made $6,000. On my 5 losses, I lost 2,500. So my net on the month, I gained $3,500. That was what I made in the month of October on 11 trades. You aren't trading this every day. So when people backtest it and say it only wins 50% of the time, sure, it's fine. That's assuming you trade it every single day. It's not available every single day to make the trade in the first place. Okay, so here's what we're looking at. This is the very first 5 minute candle on November 13th, last week on Thursday at 9:30. Is what you want to do. Get your rectangle tool and go from the top wick to the bottom wick. You can see I'm going to cover the whole thing. And then you just want to drag this over to the side like this. Make your range. You can make it as big as you want, whatever you want to do, and then drop down to the 1 minute time frame. Okay. Once you get here, you're on the micro time frames. It's going to just keep ticking away. So let's watch and see when this actually breaks out of the zone. So here it goes. It definitely broke out immediately. It went short, and we're going to wait for a retest. So we get the retest right here. Now, a lot of traders will go in at this point. The minute it touches the zone, they're ready to go. And they're going to come in right here. They're going to set their position like this. It's going to go short. I got my retest. I'm going to set this at the middle of the zone and I'm going to target a 1 to 2, which this is going to put me at like 72. This is going to be perfect. I got my retest. Now let's just wait. But is what you really want to do is wait for this to get back to the middle point. When it just touches the zone, you need to see what it's going to do because more times than not lately, this has ran up and out the other side and you're just burned right away. So let's see what would have happened if you would have set the minute it touches the zone versus waiting for the middle point. Okay. Right here, you would have been stopped out. If you were doing a $500 risk to $1,000 reward, you would have been stopped out and down $500. If you wait for it to touch the midpoint right here, you would have your stop loss at the top of the zone. Now, sometimes it doesn't come back to this point, and that's okay. That's just a day that you don't take the trade. But if you're patient, the minute this comes in and touches the zone, let's even say it's right here. I mean, whatever it is, wherever you're comfortable, you get in here on the next candle because it's moving quick. Just set your stop loss at the top of the zone. That's 32 points. You're targeting 64. Now, this is at 10:15 in the morning and you just want to let it play out. That was at 10:15. Then right here, 10:21. 6 minutes later, you have a 1 to 2 risk to reward. Let's say you want to be even more ultra conservative than that. You want to know it's going to break, retest, and then you want to know for sure it's going to drop out the other part of the zone. Like you want to wait all this to make sure it doesn't flip. The minute it breaks out again, let's say you went in right here. You then set your stop loss to the middle of the zone like this, and you target again a 1 to 2 risk to reward, 36.5 to 73 points, a 1 to 2. You're not being greedy, you're just being conservative. You want a 1 to 2. You're not asking for a lot. Right there, another example. You would have went in at 10:21 and you would have been out at 10:33. 12 minutes later, you would have had a 1 to 2 risk to reward. The most dangerous time to go in is right when it retests the zone. I know a lot of people do it. You need to wait and see how this is going to play out. If this kicks all the way to the other side, you're toast. If this does what it did here and it almost touches the top of the zone, you're out. You need to have a little bit of patience when it comes back in. Just because it retests, if it immediately rebounds and pulls back, then go in. Set your stop loss at the middle and let it run. It is what it is. At that point, that's the strategy. So let's keep watching this and see what happens. I mean, if you would have been playing this for how I've been trading lately, is let's say it goes here, I'm here at the middle of the zone, and I'm targeting a 1 to 2. This is where it would have been. Like I would have had my payout at this point. If I wanted to let it run and keep going, and I'm just dragging my stop loss down into a take profit zone, this is my entry point. Let's even say my entry point was more aggressive and I missed it and I was down here just waiting, but wanted to see what would happen. You could trail your stop loss all the way down to where you're past this point and it's technically into a stop profit, if you will, whatever. You're trailing it down and just letting it run. You would have been able to run this one all the way down to 193 points. So you would have had 30, let's call it 37. Let's, for even easier math, let's just call it 40 and call this one 200. You would have had a 1 to 5 right here. So you would have had a $2,500 day if you're risking 500 and you just trail it down as it goes, preserving in ladders. Like you get to 500 bucks, then you get to 1,000, then you're at 1,500, then 2,000, then 2,500. You could just trail it down and let it run. No matter what, you're past your 1 to 2 risk to reward. So there's multiple ways you can do this. Like I said, that's kind of the beauty of it is it gets to be your strategy. No one gets to tell you how to do it. People can say you're doing it wrong. Who cares? They're not the one making the trade. If you are making money and trailing down your stop loss instead of saying, "Oh, just take a 1 to 2 and be done." Like, why? You could have made a 1 to 5. Um, just trail it down. I just go a 1 to 2 and I walk away sometimes because I talk myself out of trades. I'll close them early or whatever if I get nervous and I'll set them and walk away. I'm fine with a 1 to 2. If I have the opportunity to trail it down to a 1 to 5, I'm taking it. Why wouldn't I? So let's keep going again and see how this day plays out. See if it pulls back. I mean, it just never came back. You could trail this thing all day long if you really felt inclined to. I mean, that's again, if it's your strategy, who cares? If you entered here, this is that, your stop loss. I mean, look how many points you would have just if you were just watching it and babysitting it, you could have trailed it all the way down. You were risking, well, I think we were risking 40 is what it was. 40 to 390. I mean, that's almost a 1 to 10 return if you just trail it down in steps. You can make your strategy your own however you want. But this is the opening range break and retest.